Aisha, the problem is local, and you just can easily identify the why here, which is earnings, FI selling, valuations getting checked, money moved out because of large IPOs. So I'll get into global markets, but first let's really look at the why of the market and where and what you should do. I think that is very, very important. Now, the why is easily to identify, like I said. I think where we are headed in the near term is very difficult to ascertain. Not everything in the market is looking great, and not everything in the market is looking bad. In the month of June, July, maybe September, nothing was looking good in the market. But I think we are reaching that phase of the market where there were excesses which were getting created on the upside. Now there is a lot of fear and a lot of opportunity which is getting created on the downside. The bull market, folks, is not over. The temperament of the bull market has changed, which is that now we are going to be going to a stock pickers market, and that is where I think the market realignment will happen. We'll talk about themes and the sectors, but where we are headed in the near term, that I think is the most important address. And I think, so here's where I think markets are headed in the near term. Do not judge the market with the view on Nifty. In the near term, the mood and the momentum, they both have gone. But typically when the mood and momentum is not on your side, you want to start buying into the market. So the approach of what is, it's too late to sell. I think we are nearing that point where you should start buying. Not everything in the market is looking good, but there are a lot of opportunities in the market which are coming better. The market in pockets are becoming oversold now, and that is a typical sign when you go to brace yourself for a bounce. I think the selling, which is largely driven by local factors. What are the local factors? FI selling and earning disappointment. Earning disappointment is coming in the price. FI selling, difficult to judge. But you will not get everything on your side. I mean, if you want to be a buyer, you have to start buying when there is panic and when the prices are supportive. So I think we are going to go through that phase where markets will test your temperament. There would be volatile and painful weeks ahead. The price action may not be very satisfactory, but I think it's time now to start saying that, oh my God, this is the moment which I always wanted. We all wanted a correction. When the correction has come, stop
no
crying.
No one has
guys.
the courage to buy.
Stop crying.
And they all want to time the bottom. But I think, in the very near term, it may make sense to let the US presidential election event get out of the way and then perhaps deploy.
Yeah, so by tomorrow, same time, or maybe by Wednesday, you pretty much would know that which way, the US has voted. So that's one big event risk that's behind us. Later this week, you will hear from the Chinese officials in terms of what they're doing with the stimulus package. So frankly, from a market standpoint and global market standpoint, by the end of the week, you pretty much would know that the large amount of the event risk actually would be over. And that's the point I'm trying to make here. The problem is not global, the problem is local. We'll talk about the US presidential election and how it's going to impact and all the data point. But the bottom line here is that in this kind of a market, when you are dealing with local problems, then you'll have to look for local solutions rather than global answers.